Hey guys, sometimes you just want to do a good, entertaining live stream for your wonderful set of audience that always comes around and supports the show, typically every day from noon to 2 p.m. And then sometimes your ISP just tells you, well, you know. Anyways, guys, I'm Justin Wise with Cracking Cryptocurrency. We're going to break down the markets for today and go over where we left off yesterday. Sorry we're not able to do the live stream today, but I am going to upload this pre-record for you guys. So let's get right into it, man. Where is Bitcoin going? The alts seem to be stabilizing a little bit. Are we in a trap? Just like I told you guys yesterday, we're connect the dots right now. All right, guys, here we are over at the live scene. And again, thank you so much for joining me. I hope you're doing fantastic wherever you happen to be tuning in from. Right off the bat, guys, if you haven't already subscribed to the channel, make sure to click that as well as the bell icon so that you never miss an episode. We are generally almost always here every single day from noon to 2, like an atomic clock, as Ivan on Tech would say. All right, so putting in some decent activity from Bitcoin last night, nothing overly major. We did get those resting bids filled at 49.30 to 49.50 as we suggested yesterday, grabbing that volatility to the downside. As you know, we were looking at the order book, and I am not typically an order book trader, but there is good confluence that you can find, especially when you have established a range low, a range high, and an equilibrium. You use this in confluence with the technical strategy that you are looking to build. But anyways, we were looking at that order book deeply yesterday. There was a big resting bid at 4,900. And I said, listen, guys, as we can see that there's a large bid at 4,900, I'm going to front run that large order because it had not budged all day, right? Price stepped down toward it. It did not budge. It allowed itself to get eaten into. When you see a significant order on the order books, one that is one that is likely to move the market, and it doesn't budge, that is a good sign that that is a legitimate buy offer and that it's not spoofing. Alternatively, what I did see yesterday and what I did point out is that there was a $10 million sell ask that was spoofing on and off of the market, right? That is indication of price suppression and manipulation. That's order book spoofing. Somebody was attempting to scare people into selling so that price would move down and fill that larger order sitting at 4,900. So utilizing the order book in this way is a good effective method to capture significant movements in the market. I will caution you leading into it, order book trading is very subjective. It falls into that realm of subjectivity. Most people are not effective when they go to trade it. A lot of bots trade order books and a lot of bots lose you money. People think that setting up a bot is very, very simple. I know some of the most intelligent people in the world. Attempt to establish a bot or design a bot, and it does not end up working out the way that they want it. They think they just flip the switch, and it's this magical money printing machine. It's just not that simple, guys. It takes a lot of patience, time, and strategy to design a bot. And I think the reason why a lot of individuals that kind of skip developing an if this then that strategy and go right to developing a bot is that they haven't spent the time looking for the nuances that a manual trader will have to look for in an if this then that strategy. Because in if this then that strategy as a manual trader, you're going to be relying on alerts, and you're going to notice over time following what signals with what levels of confluence religiously, which is what you should be doing for any successful trading strategy. You're going to notice very quickly, manually trading, what signals work really well and what signals don't, right? So if you skip that step and just go to, well, this seems to work pretty well, I'm going to automate it, you're going to find out that you're going to miss how to code those nuances into a bot, those confirmation indicators that are going to tell you whether it's worth taking a trade or not. So for example, like a very simple automated trading strategy would be something like the stochastic, right? So when the slow stochastic crosses the fast stochastic, typically that is going to be, the other way around. When the fast stochastic crosses the slow stochastic, typically that is going to be a buy, right? Especially if you are in oversold territory. You're going to quickly discover that if you automate that strategy without confluent indicators to tell you whether or not that trade is worth it, you're going to have a bad time. If you pizza when you should French fry, you're going to have a bad time. And that's why developing an if this then that strategy, which is quickly becoming the main purpose of this channel, right? I started this channel, as you guys know, I'm here every day trying to break down what's going on in the market. And more importantly than that, investing you with the tools and with the right mentality to go and develop your own trading strategy. And that is going to serve you much better than catching the best trade of the year, for example, right? Developing your own if this then that strategy that you are going to be able to rely on for the rest of your life. The rest of your life to trade any asset class, any market, is worth putting the time, effort, and energy into developing. And I know because I get so many DMs from you guys that you're working hard on developing your own if this then that strategy. And my hat is off to you guys. We're all in this together, and I am on your team. So let's go over here to the charts. Let's go back to TradingView, the preferred charting software of choice here for us at Kraken Cryptocurrency. So anyways, we talked about that long scalp yesterday. We talked about setting bids at 49.30, 49.50, and then the area 51.50, 51.30 to look at. Now, all in my alternate account, my asks did get filled at 51.30, just like butter. Average entry of 49.40, exiting at filling my asks at 51.30. Great trade. Now, what are we looking at right now? Price is holding. This is what I want to break down for you. We've swept the lows right here. So price was putting in consolidation, and we saw confluent with the order book. We saw the order book telling us that somebody was trying to spoof the ask side of the market. Likely price is going to move down and fill resting bids and then pop back up. That's generally what that means. Alternatively, if you would see that the buy side of the order book was being spoofed, but there were resting asks on the order book, typically you would say, okay, I would expect then that price is going to pop up and then move back down because those asks aren't budging. But that buy wall, which is attempting to trick people into buying by making them believe that there is strong buying pressure underneath them, is going to get pulled, and those traders are going to get dropped to the bottom. But it was the opposite this way. We actually saw, we saw the spoofing happening on the ask side of the order book. So what happened? Price popped down and popped back up after traders got the opportunity to fill some of those resting bids. Price reached a low on this candle, 49.23. So just an amazing entry, guys. And that's what I'm talking about. One common piece of advice that I've had to give to individuals that are entering into ranges of consolidation is that you should generally set your buy order or your bid or your ask with a limit order wherever you would typically set a stop loss if you were entering into the middle of a consolidation zone. And this is especially true on BitMEX with the Ethereum and Bitcoin perpetual swap contracts. The reason why is because of it's just the nature, it's just the nuances of the market, right? The market makers are always pushing price toward liquidity, and when you're in a well-defined range, the liquidity is directly above your range high and directly below your range low. Those are always areas that are going to get tapped into. People have different words for them. Stop loss hunts. I like to call them liquidity grabs. But in general, the market maker's purpose is to push price toward liquidity, tap into stop losses, tap into liquidity where a lot of resting orders are on the order books. Their job is to push the market toward hot spots. So if you are putting your stop loss in a hot spot, you're going to have a bad time. And that sounds simple, but it's really a good, effective strategy. The reason why is because in general, setting your stop loss where setting your bid where your stop loss should be, just try it. I think that you'll have good results. So what are we looking for over the course of the day? Well, we still have that SR test at 51.30. The trading activity throughout the day will let us know if that was going to be the test and we continue to the downside, or whether we get another nice run back up at it. Looking at Ichimoku, the clarifying feature for me on the hourly here for the perpetual swap contract is going to be whether or not the Tenkan holds on the hourly. The Tenkan is now representing quite nicely the equilibrium of the range. So we've swept the range lows. We've seen that we saw that those resting order books are still there. They have not been pulled, so that's a good sign. We continue to see the spoofing on the ask side. We swept the range lows, we tapped in the liquidity from the lows, and we tapped the range highs just now. All right, now after sweeping liquidity to the downside and to the upside, my interpretation of this is if we hold the range equilibrium now, if we hold the hourly Tenkan, which is now acting as support, we will be looking for another push up to 51.50, or even better, which would be a test of the hourly Kumo Cloud and the test of the hourly Kijun, the areas of 51.80 to 5200. I would use the areas in the upper boundaries of the hourly Kumo cloud as opportunities for reloading shorts. I would have limit sells set up there so that you could capture wicks to the upside. Because overall, my trading thesis for Bitcoin right now is to continue to take it to the downside. Expect to see hopefully some consolidation though throughout this period. So I'm not saying that we get an immediate run up toward that area yet. I'm just letting you know where you should have your limit orders and where you should be prepared for your battle plan. Obviously, my average short entry on Bitcoin was from 53.50. I have taken a little bit of profit. That's on my primary account. I will not be exiting that short until the daily Heikin-Ashi does flip back to bullish or until I get another bullish indicator, which all have to revolve around the daily close. Getting back over here to our 15-minute chart, as we can see here, even time transformation did this very well on the 15-minute chart, calling a buy signal right here at the bottom and giving you a nice scalp trade just throughout the intraday. So giving you a nice 2.27% trade. Great trade for BitMEX, especially obviously using any kind of leverage. If you would have taken this initial buy signal right here, or hopefully you would have utilized these as stacking sells, because you could have rode this to the downside. Obviously, you know that you have a bearish Heikin-Ashi trend, so you need to be very, whenever the daily trend is bearish and you get a buy signal, you need to be tentative about taking that. That is a reversal trade, but you're going to need levels of confluence in nature. But anyways, the better option obviously was having those resting bids at 49.30, 49.50 as we discussed. And what's nice about this is that you actually get that nice buy signal on a candle that closes at 49.62 after tapping that liquidity. So after sweeping the range lows on the lower time frames, you do get that nice, beautiful buy signal. Even if you would have had, even if you had averaged in or doubled down, so a purchase here and a purchase here would have given you an average entry of around here, and you still would have made out with a nice 1.5% profit. So a good day trade scalp by any metrics, guys. All right. Let's look at, and of course, let's see what the Ichimoku is doing on the lower time frames. Yes, we did get that nice, obviously, did get that nice, beautiful Tenkan Kijun cross right here, as we've discussed previously. And as I've talked about many, many times, that cross actually confirms on this candle. So by the time a cross occurs, and this is going to be with a golden cross, this is going to be with a Tenkan cross, this is going to be with any kind of cross that you're talking about, two lines crossing, and this is indicative with chart overlays. This is also true with underlay indicators. So this is going to be true with stuff that sits underneath your chart. So things like time transformation, or things like stochastic, or things like RSI with a simple moving average or an exponential moving average, for example. What you want to do is you want to wait until the crossover occurs and then buy a pullback. The crossover, the bullish crossover, is an indication that there is a shift in market structure, that bullish momentum is building up and there are more buyers in the market that are pushing price up. That is the cross, whether it's an exponential moving average cross or a TK cross utilizing the Ichimoku, Tenkan, and Kijun lines. That is fundamentally what it represents, is that there is a shift in market structure. However, when we're talking about timing, traditionally you were going to be taught, and this is my big issue with a lot of people who trash talk using technical indicators to trade with and say that all you need is price action. Again, we've talked at length about how the majority of traders, especially beginner traders who go down that path, and even experienced traders who go down that path, typically do not end up being able to do this professionally. They end up blowing out their account because they take on too much risk. Technical indicators are a fantastic way to trade, but you have to spend the time and patience to learn to utilize them effectively. Most of the educational material out there on technical indicators is nonsense, right? It's going to get you in a bad spot. And that's why I've taken pains to discuss the proper way to use technical indicators, or at least the way that I've discovered over time that I can use technical indicators to achieve greater success. So as we can see here, as I've said, whenever you get a bullish cross of any kind, you always want to wait for a pullback to buy that cross. Now, what's the downside of this? We've discussed this, is that sometimes price will run away from you. Price will run away from you. However, missing that runaway trade, the few times that it does happen, is going to save you from the great majority of the time when it happens. When buying as soon as you get that confirmed cross, as you can see that candle did close right here at 50.37, and you had just a little bit of upside before price came down on you, and you were in about 0.75% drawdown, but nowhere that anybody wants to be. Now, again, it's quite possible, seeing as we just come back down and tap the Kijun after a bullish TK cross, that you would not be exiting that trade, obviously. But I'm just indicating how instead of market buying into instead of market buying at the close of this candle right here, because you do have a confirmed Tenkan Kijun cross right here, the better strategy is always to instead set limit orders at your Tenkan and your Kijun. So you'd be scaling in this area right around here. It's going to save you from the market order fee, and it's going to allow you to just have better psychological control over the trade, because you've established a rule that if price falls down here into my buy zone, right? You let the market come to you. You don't let the market grab you by and take you wherever the market wants to take you. No. You wait for the market to come to you. And if the market doesn't come to you, you continue to wait until you get a good setup where you can wait for the market to come to you. Using limit orders is going to save you from BitMEX fees, and it's just going to give you better psychological control over your trades. It's going to give you better control over your emotions if you just tell yourself going in that I am only going to take trades that come to me. I'm only going to take trades that fit my qualifications. I'm not going to let the market drag me hither and thither. So we get that nice, this would have been a great entry for the long scalp right here. And as we can see, in conjunction with Ichimoku, we obviously get a sell signal here. Good opportunity for you to potentially take half of your profits, move your stop loss to break even. And then we get a nice volume spike right here. A nice volume spike with a high tail often is an indication that, at least in the short term, price is going to move in the opposite direction. Now we have a couple interesting areas. Obviously, we have the hourly Kijun that we talked about before. We also have that horizontal at 50.13. So both areas that I would like to see be supportive of price. If those areas get broken, I think that we're going to see more immediate movement to the downside, so quicker movement to the downside. So even though, yes, overall in the midterm, I think that we are going lower. I've discussed those levels at length. Let's actually go to the higher time frames here and talk about those levels. So you can see where my cyan blue box territory is down here at 46.69 is going to be at my entry area on BitMEX. That's going to be an area where I'm looking for interesting scalps to the upside, or at least to be a potential buyer. Also 43.39 and 40.96. Now, one thing to keep in mind is that I've seen a lot of other people do charts. And just so you understand, my idea is not to scale in this whole way down. I'm a trader. These are areas where I want to have limit orders set to buy, and then I'm willing to take that trade to the upside as far as it goes. Since we are trading primarily on the lower time frames here with movements to the upside, and on higher time frames here with movements to the downside, we will be assuming that the market does not make full-on reversals until it taps into an area of liquidity. These also represent take profit targets for our longer-term short positions. And again, the primary area as well is they also represent areas where you want to have limit buy orders set, because they're important critical areas of the market where there's going to be liquidity. Make sure that you are using proper position sizing. I've talked at length about the proper calculation for position sizing, so that if any one of these areas does not work out well for you on your long trade to the upside, and again, you guys do have to understand that I'm using separate BitMEX accounts, obviously one for long-term positions and one for counter-trend reversal trading, which is more advanced, and that's fine if you're not comfortable and if you're not there with your trading yet. It is kind of a handful to manage, but it does require, at least for me, it requires multiple computers, multiple monitors, and multiple setups. But again, you don't have to trade that way. You can be more patient and passive and just trade the if this then that strategy on the time frame of your choice that we've been working with and helping you build throughout the course of this channel. Let's look at, obviously, Ichimoku here on the higher time frames. Why are we interested in this area? Actually, sorry, this needs to... Nope, that just needs to be moved right there. We're actually going to tighten this up a little bit. So anyways, we're going to tighten that up a little bit, and I'll make it less subjective as we move forward. But you can see where I'm targeting. I'm targeting the daily Tenkan. That will also be congruent with the top of the Kumo cloud for a retest of support. We do have the Kumo cloud sitting down at 4,500, so potentially a wick down to that area as well. But I would reckon that we do end up touching this area of support, wicking down, and closing above. Let's see if we can find confluence. Let's see if we can find confluence with that hypothesis on our higher time frames as well. So let's go to our weekly. And the first thing that's going to point out to me is, sorry, let's expand this just a little bit. Because of the distance from the weekly Kijun, we have a little bit of resizing here. So we don't have any confluence with our weekly levels except for our 3-day Tenkan, which we actually need to move down a little bit. Okay, so now that area has become 43. Actually, let's get it accurate. Sorry. And to get it accurate, we open up our data window. And we're going to look over here and see that it is 42. 97. All right, not a big divergence there, $5, but maybe $5 will matter in the future. All right, so we'll set that there. And this is how we're just constantly readjusting our levels and our interesting areas of liquidity where we want to target. Now, is this a very good system? Yes, this is a system that I've used for a long time. Could you find something better? Is it potential that these areas do not get respected as liquidity? Yes, that's a possibility. But I have devised my strategy, and I know that at the end of the year, I'm going to have more money than when I started because I've followed the strategy for a long time. But I encourage and I recommend and I challenge you to go out there and put in the time and strength with the indicators that you can find that are amazing indicators. There's many, many, many really good indicators out there. Utilize the time and put in the grind to develop your own if this and that strategy that is even better than mine. That's what I want. I want everybody to be in this market. I want everybody to be profiting. Okay. We also have our 3-day levels of the Kijun and the Tenkan. So we do see, interestingly enough, we do see that 3-day Tenkan coming in right where that daily Kijun was. So I do think that that's a level that is going to be 45.03. And again, just so you guys understand, the purpose of looking at these weekly, 3-day, and daily lines is not to say that, of course, price could hit any one of those areas and then it could go up, could go down. That's garbage. That's the regular TA you're going to get. Those are areas where you want to have limit orders set to catch a potential profitable trade. They also represent attractive take profit targets for trades in the opposite direction. So if you are short, if you are looking for what are areas where I should begin scaling out of my short position, the areas on the chart that are going to be acting as support are good areas as well. $45.03, and then we do have a speculative Kijun coming in at 48.44. All right, so those are the areas that we will be looking at. We've already tested almost all of these areas, so they'll be coming off the chart soon because we don't want to beat a dead horse with having too many lines on our chart. We only want to have the significant lines on our chart. The lines that are yet to be tested, the lines that we expect will be tested soon. So we have the daily Tenkan and our horizontal support and resistance level there. Have our daily Kijun and our 3-day Tenkan. And this level right here is going to be our 3-day Tenkan. Kijun, sorry. I apologize. And where were those weekly levels coming in at? Yes, we do have our 3-day, our weekly Tenkan coming in here. Down at 42.97. Now let's take off Ichimoku, see if we can find confluence with our exponential moving averages as well. All right, as we can see here on the weekly basis, we are still being suppressed on a closing basis by the weekly 55 exponential moving average and the weekly 100 exponential moving average. We've done this analysis on the Bitstamp chart. It's a little bit more effective, but just for the purposes of confluence, we will be looking at it on the BitMEX chart today. So, okay, cool. We haven't been able to close above that. We can see how our resistance box has been suppressing price beautifully. We wicked up into it quite nicely. And this is really the area, as I talked about, this is the zone where I stop looking for, where I look to definitely be out of my long trade and looking for entries for my short trade in the zone between 57.43 and 61.50. Which I think gets sold into hard if we don't see the full rejection from this area. My initial analysis, my predictions moving forward for the long term, our initial rejection from this zone right here, a retest of the 46.69 area, $4,600 area, which is going to be confluent with our daily Tenkan as well as our daily Kijun. So basically the range between 4,500 and 4,600. I would expect to see wicks down as low as this, and then I would expect us to retest that resistance zone, potentially even wick up as high as close to 6,000, and then I would expect us to move more significantly down to retest 4,200, and I think trade back into the $3,000 to $4,000 zone. We'll be updating these levels that are below 4,200 as we get closer, because we'll be able to have our moving averages and our Ichimoku levels catching up with us a little bit more significantly. Let's go to the 3-day. See what confluence we have. We do have our 200 to 3-day exponential moving average. We have our 55 3-day exponential moving average, giving us good confluence down here in the zone of our daily Kijun and our 3-day Tenkan, again coming in at 55.03. And going to the daily, we do have the daily. So basically the most critical area on the chart for me right now, which is going to be 46.69, that realm right there. We also have our daily 200 exponential moving average. Well, so a lot of important things to be talking about here, very important areas of the chart. We also have that daily 55 exponential moving average congruent with that 42.97 level as well, which if we go back is our weekly Tenkan. Okay, great. So very important levels, very critical areas on the chart, very excellent places to have limit orders set or to be looking to take profit on short orders right now. Okay. That's about it for BitMEX. So throughout the intraday session, still looking for movements to the upside. Intraday session, as I said yesterday, getting those bids filled at 49.30, 49.50. Have had the asks filled at 51.30. Asks still sitting at 51.50, and we'll actually be targeting the 51.80 area as well. We could potentially go as high as the $5,200 area, which is going to be the hourly Kijun also. Still have a bearish daily Heikin-Ashi trend, so be on the lookout for that. But I do see that Bitcoin's price is moving sideways, and as a result, altcoins are finally giving us a nice leg up. So as I talked about yesterday, I am looking at this as an opportunity for any of you who have been underwater in your altcoin positions or who bought near the top potentially. Look at this expansion in the altcoins as an opportunity to be able to get out of the market at a small loss or break even or potentially even a small profit. And those of you who were not in underwater positions, obviously we're taking that information and saying, hey, there's going to be some good opportunities for altcoin trades. I better buy the dip now. And again, a lot of those positions are up. We have a nice green day in the market. So congratulations. I don't think that it's going to be sustained. I don't think that it's going to continue. I think this does represent kind of a final opportunity for profit taking before we take more of a breather. Of course, every altcoin is going to be a little bit different. Not in general. Obviously, the market is going to move in general as a whole to the downside. As you guys see, I'm using general and not broadly. Trying to trick you guys who are doing the cracking cryptocurrency drinking game up just a little bit. But a good day in the market, guys. A good green day. Can't complain about anything. Getting an opportunity to get out of a few of my altcoin positions at break even. So things are doing well. Very happy about that Bitcoin trade that we were able to put in on the scalp long. Let's see here. Is there anything else? Normally this would be the time where I look for suggestions or questions. So it's like one of those odd things for me. Go look at Coin 360, do a nice little refresh. So things falling off a little bit. Most of the altcoins pushing back up, again, having that nice green day. Oh, yes, of course. Let's go look at some of our fundamental data metrics here. Let's go look at our long terms. And we will look at total crypto market cap. And this is going to take just a second to load because it is a slow loader. Yes, I did want to point this out. I think this is significant because we haven't gotten one of these for a while. I do want to look at the weekly total crypto market cap chart here. And we're going to take Ichimoku off and VPVR for the purpose of this. We are getting the time transformation weekly sell signal. We have not got one of these since near the top of the market. And back here, when we did have 3 weeks of downside on the total crypto market cap with a significant plunge down in the total market cap, about 30%. Definitely an area where you would have wanted to be out of the market. Nobody wants to hodl through a 30% drop. There's no point in it, right? The idea of being a trader rather than a passive investor is that you're able to control your investment. You're able to control your entries and your exits. And you're going to have to just take a calculated system of risk. And I think that in general, those who just stick to some good, simple rules of a back-tested if this then that strategy are going to do better in the long run. Any simple statistical algorithmic buying and selling strategy does better than buy and hold returns. I will argue that till I'm blue in the face because the data is not there to say that buying and holding produces better returns than trading. Trading the wrong way, yes. Trading the correct way with a strategy that you have back tested and can prove that is profitable over time, yes. So the first thing that I do want to point out and that we cannot ignore is, of course, this weekly sell signal for the total market capitalization. On the weekly chart, this has responded beautifully to technical analysis. And as such, we can continue to use it as a powerful indication of the market. If something responds well to technical analysis, we continue to use it until it does not work well. If it ain't broke, don't fix it. So what do we notice here about the total crypto market cap? Well, obviously, again, as we pointed out, the weekly sell signal. Now, as we know, time transformation is a powerful indicator. Their signals are very good, but they should not be taken as gospel. And this is the indicator that I've created. See, I prefer to be more upfront and honest about the technical creations that I've made rather than some channels that I see where they say this indicator that I've developed is the best, and then people get thirsty over it. Time transformation is I created it to be the most powerful tool that somebody could use for manual trading. It plots momentum, trend, divergence, reversals, everything that you need to know, and volume, all right there. But you still need to use it in confluence with other technical indicators. And there are two technical indications that I want to point out that give confluence to this being a scary signal because well, you'll see what I'm talking about here. So the first thing that I want to look at, obviously, is our exponential moving averages. Obviously, we can see here how the total crypto market cap was responding beautifully to our 200 exponential moving average, to our 21 exponential moving average, and now to our 155 exponential moving average. You guys know that I put a lot of weight on our weekly 21s. I put a lot of weight on the 200, the 100, the 21, and the 55. Those are commonly the most frequent exponential moving averages that I'm talking about. As we can see, your price has done a double tap off the 100 and the 55 exponential moving average, and price has, for the first time in its 2.5 month expansion, almost 3 month expansion to the upside here, since the beginning of February, really. So 2.5 month expansion, getting a significant weekly bearish candle. I mean, this is a significant movement that individuals are going to have to contend with, right? There's buy the dip, which occurs in an uptrend like this, right? You see these wicks and the candle closes strong and the candle closes strong. That is buy the dip opportunity, right? As an active trader. This is potentially the beginning of significant downside, okay? And again, the last time transformation weekly sell signal that we got was at the top of the market, and the one prior to that was before an almost from the close of that weekly candle, we went down 33.23% on roughly. Definitely an area that you don't want to be caught up in if you're holding long positions open. The second factor that I want to draw your attention to is the volume spike. Look at this volume spike on the weekly candle. If we zoom out, you can see that this is the largest volume spike in the total market capitalization chart. The largest volume spike. And we've had 2.5 months of uptrend. What typically happens when you get a massive volume spike at the end of an uptrend? What's that indicative of? Late stage buyers is generally what it's indicative of. The second to largest volume spike prior to this one, so this is the largest volume spike on the chart. What is the second to highest volume spike? It's the top of the market. It's the top of the market. And as we can see here, so I'm measuring the volume spike to the left, as you can see hopefully on the chart, to the left of the second highest. So this was, we're trying to figure out what's the third highest volume spike. It's not this one. It's this one. It's the current week. And the week isn't even over yet. And it's the third highest volume week in the total market capitalization. Significant. Very, very, very significant. And again, the perma bulls have to contend with this. And this is the information that I don't think you're going to see on any other channel. So you guys need to be looking at this. Let's go down to the lower time frames. We're getting the sell signal on the 3-day as well. After 1, 2, 3, 4 tests of resistance, obviously massive orders sitting here that completely rejected the market. Where's the next area that I see total market cap returning to? Here on the weekly time frame, I expect it to return to here. Why is that? Let's go over here. Table this for a second. So basically what I have done is I have taken the resistance zone right here. I've taken the open and the close of this range right here. This was a level that acted as resistance, rejected price, This was that significant drop in price that I talked about, that 35% drop. Price retested that level as resistance, got rejected on the weekly, broke through, pulled back, and back tested it for 2 weeks in a row before expanding off. And as you know, an area on the chart that acts as previous supply will often act as demand on the second pass-through, especially when it's disrespected. I just drew this level on the chart. Let's actually just adjust this down a little bit. I just drew this level on the chart. So this was not there. This was a level that is, but now in retrospect, obviously has been disrespected. So we would expect it to act as strong demand. That's bringing us back down to about 145 million to 151, billion, Billy with a B, in market capitalization, pulling us a whole another 10% down. I think that there's going to be more significant profit taken, especially as we are nearing the ceiling of the total crypto market cap, which is similar to the $6,000 level for Bitcoin. You do have to understand that a lot of the individuals with large holdings of cryptocurrency, especially altcoins, man, the altcoins are a massive part of this, right? There's a lot of bag holders of altcoins who do not share the bullish optimism, who do not think that we're going to have another bullish run. And they are going to utilize any opportunity for price to revisit the previous level of consolidation, where a lot of them bought in late stage, or an area on the chart that a lot of people think like, oh, this makes a lot of sense for me to sell from. So I'm going to do something now that I don't typically do. And this is, I'm going to speculate on the fundamental future of the crypto market. All right. So to do this, we are going to use total market capitalization. I want you to just for 1 second, I want you to forget all the crap that you're hearing on Twitter. I want you to forget all the stuff that you're reading in the news. And I just want you to think in terms of dollars and cents of people who actively have a lot of money in cryptocurrency, enough money to move the markets. We're talking crypto hedge funds. We're talking institutional investors. We're talking kind of high stakes gamblers. Okay, high stakes gambling. Not high stakes gamblers, but traders, independent traders, whether they represent a prop desk, because you have to understand that prop desks, more traditional hedge funds, if you don't think that they have like black box traders that are playing with a few percentages of their money in the cryptocurrency market as part of their high risk yield portfolio, you're crazy. You're absolutely crazy. All you're going to hear on Twitter is people talking about, yeah, man, just bought me a big bag of Doge, it's going to the moon, buying the bottoms, scraping the bottoms. That's great for them, man. Fantastic for them. And if that is your mindset, you're absolutely, solution to you, man. I don't think you're dumb. It's not that I'm out here being pessimistic. It's just that I need to give you guys my experience and what I see as somebody who's done this in different asset classes for years. And the reality is that from the people that I talk to, this isn't just the people I talk to. This isn't just anecdotal. This is just fact, right? There are a lot of individuals who have held and are in extremely unattractive positions in cryptocurrency, and they're not willing to hold those bags. Now, this is not to say that cryptocurrency is not going to have another bull run. We are going to have another bull run, but it's probably not going to happen right now. Why? Because we just haven't cleared out enough. We can't. Okay. When price returns to the previous ceiling, or to the current ceiling, the previous floor, that level of consolidation at 6,000, you're going to see, which we're already seeing now. Because look at where market capitalization is. Look at where market capitalization went into, and look where it's rejecting from. There was a massive amount of consolidation here at the ceiling. A lot of individuals exited the market, and you can just see, look here. These candles, what did they actually represent? They're representations of human beings who did things with fingers and clicked buttons, okay? What is the psychology of this movement, of this down movement in the market from 6,000 to 3,000 in Bitcoin's price, to give you an analogy? This is panicked investors selling en masse, okay? So what about the rest of their colleagues who didn't sell when they did, who watched price dump, and now they've seen it go on a run? Are they thinking that Bitcoin's going to the moon? They're not. They're thinking that, oh crap, I've got an opportunity to get out at break even. Or at least I get an opportunity to get out where everybody else got out, where all the smart people already got out of the market, right? Where Goldman Sachs out of the market, whatever, you know what I'm saying? With less egg on my face. For the prop desk that I'm trading for the hedge fund that I'm trading for, et cetera, et cetera, et cetera. That's why we are going to reject from this level, because there's a lot of that money flying around. There's a lot of that profit that's going to be taken. And it's not even profit. It's going to be profit in the future for somebody, but for the majority of the capital that's going to be exiting the market, for the majority of the movement that's going to occur to the downside, it's going to be the final exhaustion. It's going to be somewhat of the final capitulation of sellers that of all the cryptocurrencies that traded hands in this level of consolidation right here. This was the majority of investors exiting the market. This represented savvier investors. And this movement that we're going to see here is going to represent the last of the weekend investors. It has to happen. It has to happen. Now, this is something that I would love to be wrong on. I'm still sitting in spot Bitcoin. I will not. There is a very low probability that I will be moving into Tether, pretty much regardless of where price goes now, because I'm comfortable as a long-term believer in Bitcoin. I'm comfortable to secure my investment that way because, again, Bitcoin does not account for all of my investments. So I'm comfortable to think long-term with Bitcoin and accumulate at these levels. But as a trader, there is always something technical that could happen on the chart that would cause me to change my mind. But the true purpose of technical analysis is to attempt to predict the market and have a battle plan, right? To know what you're going to do before you have to. There's nothing wrong with being a reactionary trader. There are reactionary trades that I make because sometimes you just have to wait for confirmation to enter into a trade. But there are ways to react to what the market is doing, to what the market is telling you, and not be dragged by the cojones around by the market. So I want you to think about that very, very closely. I want you to stop with the Bitcoin all-time high stuff that you're hearing on Twitter, and I want you to secure your portfolio in the most secure way. I want you to handle your investment in the best way possible. And that is to understand that these are significant movements in the market that we're talking about. And it doesn't matter how many Twitter posts somebody makes. It's not going to push Bitcoin past the actual money that needs to change hands to push it to where it needs to go. So I do think we're going to see 3,000 to 4,000 again, potentially even lower. And I would love to be proven wrong. But so far, I have not heard a convincing argument beyond Bitcoin got to go moon, dog. I just haven't heard it, man. And as a result, I will continue to be here every day advising, educating, and teaching individuals how they can take advantage of these situations to improve their personal lot in life. Because if it's not benefiting you, why the hell are you here? If you're losing money, why the hell are you continue to do the same thing over and over and over again? That's insanity. Develop an if this then that strategy. Backtest your strategy. Paper trade your strategy and understand how it works. Understand its nuances. Understand what you have to adjust. And then trade it. It's that simple. There's a lot we could look at, guys, but I think I'm going to leave you with that. I'll do my best to be back here tomorrow evening from 5 to 7 p.m. to give you guys a weekend update. We're going to be moving into the weekend right now, so I'm going to be closing a lot of active positions. As you know, I don't really like to actively trade over the weekends, but I'll be doing my best to work with our students, work with all our students in the premium subscription group, help them develop their own if this and that strategy, and give them the best entries that I can possibly provide. Until then, guys, I've been your host, Justin Wise. If you guys would like to be a member of the Cracking Cryptocurrency Premium Trading Group and have access to the mentorship, indicators, strategies, setups, and signals that I talked about, as well as access to our database library and all the other benefits that come with being a member, you guys can, of course, check out the link at the top of the screen, premium.crackingcryptocurrency.com. I'd love to see you in there. And of course, if you haven't already, make sure you subscribe to this channel and hit that thumbs up button. And I'll see you on the next one, guys.